What's up, everyone? I'm gonna come back and talk about another stock. So, another stock that I found online, see if it's worth buying. So, I haven't really got into it too much. I know who they are, Sysco. I see their trucks everywhere. I said, hey, I wonder if it's worth investing in. Well, I pulled up their website and get their stock information. So, yeah, this is their stock information, their dividend history. They look like they pay consistent dividend. So it meets one of my requirements, one of my three. It doesn't pay dividend. Yes, it pays dividend. So it does look like it is in food delivery, supplies, and let's look what Cisco's all about. Their purpose. So they connect the world to share food and care for one another. So okay, so it's a food company. It's pretty much what I see. Now, here is another website. At the heart of the food they serve, I see these trucks everywhere. And all I did was look up, hey, what's a good um, dividend income? And one of these it says it is Cisco Corporation or SYY. So here is where I got it from. Three high yield dividend boost your income in 2025 and beyond. And on there, it was SYY. So Cisco Corporation is a leading global distributor of food product and related to service for food and hospital industry. It produces and offers including fresh and frozen goods. I do see this truck everywhere, and I do see my hospital use them. So I was like, man, is it worth purchasing? So first thing first, let's look at the max. Is it doing well? Well, it's on an upward trend, so it's not bad. Let's check the 5 year. So right now, the 5 year is in a negative 4%. And then the 3 year is 4% gain, and 5 year is 5%. Well, that's not bad. Let's go into the finance already. So before anything, it pays a 2.69% dividend. So not bad. And analysts do say it's gonna be at $84 in over the next year. Now, is analyst ever right? It's 50-50. So let's see what's the good and bad about this by per AI. So earnings, it get a 4 star. Growth, it has a 5 star. Health, it has a 4. Performance has a 2. And evaluation, it has a 1. So overall, according to AI, it is a okay stock. Let's look at the finance. Net profit is 2.48%. Operation is 4% income. Operation expense is 14%. And gross margin is 18.5. These are not the profit margin I like seeing for dividend paying stock because it's barely making by 1 or 2%. Yes, that 1 or 2% is in the millions, but while you're trying to pay this dividend stock, it could easily drop this down. Now, I believe these are a dividend king. So they are a dividend king, so they do have a good history of increasing it. Their business has been going up year to year. From 2017, it does have a good gain. Cost of goods sold, it has been going up. Gross profit is not bad. gross margin is 18.5%. Kind of on the weak side. I kind of like seeing a 20 or 30. So let's talk about what they are. Companies described Sysco Corporation is engaged in selling, marketing, and distributing food products to restaurant, healthcare, and education facilities, lodging establishment, and other customer prepared meals away from home. They are based in Houston, Texas, which I like because they are a Houston company and they employ 76,000 employees. That's actually pretty good. They don't really have a lot of people selling their stocks. They do grant a lot. Looks like Russell Neal, let's check. It's one who sold, and McAndern sold. It's a senior vice president of legal. Okay. So it doesn't look like anyone in their company really sells. So that's a good news. Any bad news? Let's see. Any bad news about this company? No. So this is the company that will deliver your food to the hospital. So I don't think they're going to go out of business anytime soon. They pay good dividend yield. And let's see. Is it worth investing? In my opinion, does it hit my growth performance that I want? No, it doesn't hit my growth. The hardest part about me building my portfolio is a lot of companies pay dividend, but they give up their growth opportunity because of that. So if they give up their growth opportunity, it's not a good long-term stock for me because I can get a better return elsewhere. So right now, I'm trying to build my portfolio based off the growth while still collecting dividends. So it meet number two is it meet my dividend criteria. And number three, it does pass the financial portion. I don't like how it's at a 2.48% net profit, but it's still in the profit. And the gross margin is 18.53. So with my idea, will I think it expand anymore? And I will have to see what the report says in 2025 and recap on this because they did not grow much in 2024. And looking based off the data here on their revenue, it's not growing at an exponential rate. So if they're not growing the revenue, but like 3%, 4% a year, that barely keep up with their dividend payment in my belief. So their stock performance is not going to do well. And this is my personal belief looking at the finance. Because yes, in 2022, it grew 33%, and 2023 grew 11%. Those are really good growth years. But then in 2021 and 2020, it had a negative. And the issue is, it looks like it's going to head back into the negative in 2025. So I am going to avoid this stock because I think they will go into the negative based off this finance because they are not, they have a huge growth, but they don't have a, how can I say it? They don't have a steady flow of increases. It's always been a low 3%, 6%, 9%, and only the last 2022 and 2023 they hit above double digit on their revenue growth. So the revenue growth isn't as great as I want it to be. So due to that, their finance doesn't pass my portion. It is in the positive, but it's very close. So what happened if they have a year like a negative 14? Well, they only made 1% that year. And then in 2020, they made only 0.41%. It's very close margins right here. So if this does not grow, or the company doesn't grow proportionally, they're going to be in a negative. And since they're so close, it doesn't make me feel any better. And I can look at the other aspect of, if they're not growing, their stock is not going to perform as well. So if their stock isn't going to perform as well, I do not want to own a stock that I'm just going to equal out or make 7% only. So if I look at this, they went up 5% plus 2%, that's 7% gain. That is, the market right there. So why invest in them if I'm only going to make 7%? And they have, according to AI, a debt to income ratio increase over the past 5 years. Analysts forecast less than 20% upside for the 12% price markup. So it does have a lot of good on the green, but it does have high debt. And the earning was down, forecast is down next quarter. So another thing, I do like looking at the insiders and the insider selling. I can look at the big investors in this company, what I normally do, but I don't think I need to look at it on this one. I don't think it's worth putting in my portfolio. So please like and subscribe to my video, and see y'all next time.